Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. We appreciate you listening. We have Kyle White on, certified financial planner on the Haven investment team with us today, Kim, and we're going to talk about all that's going on in this world, the war and how that affects jobs, oil, and retirement, and a lot of good stuff today.
Absolutely. Boy, we have really seen, over the last few weeks, a lot of changes, all of it related to geopolitical issues. And I know there's a lot of people who are uneasy, just wondering what the future might bring. So this is the perfect timing, of course, to talk about all of this. Kyle, so good to have you like always.
Yeah, thank you so much for having me back.
You bet. We're going to talk about understanding the recent Bureau of Labor Statistics jobs report. We're going to talk about oil in the Middle East and how geopolitical issues can affect your wallet. I think we all have a pretty good idea of that. Budget strategies to address inflation today. And then finally, we'll wrap things up today with structure for the finances to weather market turbulence. And we've seen a lot of that as well of late. Let's talk about the jobs report. Because the jobs report, Larry, it feels like to me was so consistent for such a long time, and now it seems to be all over the map.
It is jumping all over the place, and it's an important report because it shows some real indicators in the industry, whether it's healthcare, job creation, losses, payrolls, et cetera, the unemployment rate. It's a key report, but I do agree with you. It seems like it is jumping all over compared to what it was. There's no doubt about it.
So let's talk, Kyle. Well, let's bring you into this conversation. Just how important is the jobs report, maybe to the American psyche first and foremost, and then secondly, how does it reflect the economy?
Yeah, it's very important in terms of being an indicator of how the economy, that the health of the economy is. And it's a leading indicator for the Federal Reserve on their interest rates because it's one of their two mandates that they have. They have maximum employment and tamper inflation, so it's not out of control and that we don't have deflation, right? So it's one of the two main things that they have their guidance of information from.
Sure.
And when it came out, it is a month old of data, right? So it's a lot more historical than it is actual current data, because a lot of times you look back on data and it can be revised, and 16 of like the last 19 of these jobs reports have actually been revised. So it's important to know what's actually going on there.
Well, let's take a look back at the February jobs report. When it comes to growth and decline, there were 92,000 jobs lost, which was stunning to a lot of experts. Nobody anticipated that is what we were going to see. And unemployment ticked up. That was the first time we'd seen it tick up to 4.4%. And wages rose 3.8% annually. So talk to us a little bit about what that signals to you. And again, keeping in mind that these numbers may change somewhat, like you said, because after a month, they are frequently revised.
Yeah, the numbers are higher than what was originally anticipated, and that created a little shock in the stock market specifically. You could see a little volatility following that information coming out. But it drives a lot of what happens, like we said, with the Fed, but then also policy decisions, that impacts the market a lot because they are trying to anticipate, the market's trying to anticipate what's going to then happen throughout the year in regards to the Fed. Because right now, there's, depending on where you look at, there's about 1 to 2 cuts expected for the remainder of this year. Now, with that unemployment number increasing, that would traditionally trigger the Fed to want to cut rates. And the Fed may shift from the inflation-centered focus that they have more so been recently to more of like a job growth focus. So that's something for us to definitely monitor, because if this unemployment rate does start to continue to get a little more out of hand, then they could definitely shift that. Plus, we do have a new Fed chair coming here in just a couple of months. And that could drastically change the outlook of the Fed's policy decisions for the remainder of the year, and then also for 2027.
Sure. So, Larry, what does this mean practically for a retiree or someone who's getting close to retirement?
Well, those that are looking at retirement very closely, you got sequence of returns risk. People retire, the market goes down, and then they get panic, which is very normal. And then you might be forced to sell something depending upon what your income plan is. And again, it comes back to what you and I talk about weekly is, do you have a plan in place that can weather the storm? Because we know these storms, they happen. They have historically always happened, and they're going to continue to happen time and time again. So what is your plan? Have you made any modifications to it? Obviously with this market volatility and the unease comes the interest rate environment, which Kyle mentioned. You might not be making as much on those CDs or those bonds, and those high yield savings accounts that were paying 4.5% now might be 3% or in that range. And your purchasing power. Many retirees are on a fixed income. I mean, a high percentage. All of a sudden, the purchasing power of that dollar, your income doesn't go as far because things are still expensive, especially the main ones: food, electricity, food, and utilities, and so on and so forth. So it can cause lots of fear, knee-jerk reactions, which is what the Haven investment team and what Kyle and we try to prevent people from doing, and say, remember, we have a plan in place for these times that get a little rugged. Oh, that's right. And, when this happens, sometimes it just needs to take some reassurance. So we encourage our folks, our clients, to talk to us if they have questions, worries, or concerns. That's what the partnership is. We work for our clients, and that you should have a partnership to go through these things, so you don't have to do it alone, wondering what in the world's going on in this world. Well, we all know there's a lot going on in this world.
Mm-hmm. So, Kyle, since this jobs report has come out, how have you changed some of your strategy associated with your clients or potential clients?
Well, it kind of reinforces what we already were doing, but it also creates a good conversation for newer clients to implement, the traditional portfolio that we have been doing, and that is creating diversification in pretty much every area possible, having stocks, bonds, and guaranteed type of accounts, because, you have a purpose for each of those. Stocks, you're going to have appreciation, but there could also be a lot of depreciation. Mm-hmm. Bonds are going to be a little more stable. Traditionally, they're supposed to be, but they can also lose. But then also having a guaranteed type of account to really protect in times like this and the volatility that we're seeing, that which has no loss potential, that's been a really nice piece for the portfolios here this year, and then also the last several years, because there has been a lot of volatility within bonds specifically. So just making sure that we're diversified and making sure that we have all these different asset classes, and that we have appropriate types of accounts to be able to pull from a tax-free account, or if we're trying to produce some more income in a tax-efficient way, we can pull that from a taxable account.
Larry, it just seems to me that this time period, this volatility, which comes and goes, it's now, it could be again in the next 3 years, it could be, the next 5 years. But this is just a perfect example of why, when people are planning for retirement or are in retirement, having a partner is essential.
It is. And we've said that for years. Retirement planning is more than this economy talk or the market. It's really having a plan. How do you turn that savings into an income stream to support the life you worked all these years to get to? Being informed is important, about the broader economy and everything. And it may help you make some smarter decisions, if you will. But the focus really should be on creating financial stability, that lets you enjoy a stable retirement. I think all listeners can agree that retirement, we want it to be stable. So if this is all something you don't know if your plan is stable, you maybe are listening and you don't have a plan, or it hasn't been revisited. Just this last week, I had somebody say, I don't think my financial advisor, I don't think they're listening to me. They're not hearing what I'm saying, that I don't want as much risk in the portfolio. That might be a red flag. And if that is something, you may want to explore other partners or explore other tools and get some suggestions and some recommendations. It's okay to get a second opinion. I mean, if you're listening, it's okay. Sometimes people get stuck in their ways and they're, I'm with so-and-so and I just, I'm loyal. Well, I'm small town. I'm probably loyal to a fault. And if my wife was on here, she would say I am loyal to a fault. Getting a second opinion, I always say separate the names and the faces and the companies. Are you doing what you should be doing at this stage of life? And do you have a good partner that will help you coordinate all these retirement topics so it can be as stable as possible? I find that extremely important, and it's been our focus at Haven Financial Group now almost going on 11 years.
So if you're looking for a second opinion, you're looking for a partner in putting together a retirement plan or making sure that your current plan is one that can endure these volatile times, give the folks at Haven Financial Group a call. 612-504-8400 is the number. You set up a free consultation, 612-504-8400. Let them know that you heard us here on the radio. When we come back, we're going to talk about oil and the Middle East and how these geopolitics can affect your wallet. I think we've all seen that at the pump here of late, but we'll talk more about it right here on the Haven Financial Group radio show.